Welcome to Real Estate Live, where your questions get answered. Today's hot topic is what's going on with mortgage rates, and there's a lot of rumors about mortgage forbearance. Exactly what is that, and how's it going to play out with lending guidelines? To help us make sense of this, I'll interview Loan Officer Bill Merren with New American Funding in Las Vegas, Nevada. I'm your host, Andrew Finney, with King Realty Group in beautiful and sunny Las Vegas, Nevada. We are streaming live on YouTube and Facebook. To ask a question, please use the chat box. If you're new here, please subscribe and smash that thumbs up button now. Thank you. I'll be going live 9 a.m. Pacific Standard Time every Monday, Wednesday, Friday. If you'd like to join us on the screen, please feel free to use the link in the show more description below. And also joining in today, we have a special guest, Marlene Luviano out of Dallas, Texas, that's going to be sharing more information with us about what's going on with the Dallas market. Without further ado, let's go ahead and get Bill and Marlene on. Okay, I got Marlene. See, I love live streaming. It's always fun stuff trying to live stream, right? And you're like, hey, everybody's here. Let's get everybody going and active. So Marlene's obviously in the middle and Bill's on the right. Thank you for joining in today. Please have at it, Bill, with these trends of what's going on with these mortgage rates and also the mortgage forbearance.
Yeah, so Andrew, great topic today, man, because there's a lot of talk around both those topics. The interest rates are definitely fluctuating on a daily basis, like we've talked a lot about the last 2 weeks, which always happens on a daily basis. They're fluctuating, but we've seen massive swings to the highs and lows, specifically when you're looking at credit scores are a little bit lower than 660 and below. You're definitely seeing some challenges there with the rates because there's higher risk and there's just things with lenders. Some lenders are not even lending to credit scores below 680. So kind of an interesting time for sure when it comes to that. So it's something to definitely look out for.
Okay, good stuff. I appreciate that, Bill. So tell us what's going on with this mortgage forbearance issue, because I know you and Marlene were both mentioning it before we went live. And Marlene's like, hey, yeah, Andrew, we definitely need to talk about some mortgage forbearance. And you're like, hey, a lot of people are asking now about this. So dive deep into that. Marlene, please feel free to jump in anytime as well that you're thinking something, and let us know your thoughts so we can have a great conversation here.
Yeah, Marlene, please jump in because I'm going to talk a lot about it. So, I mean, Andrew, like we were talking about kind of offline too, is it is a hot topic right now. You got everybody talking about it. I've got dozens of calls just in the last week-ish, especially in the last 24 hours, several calls about people just assuming because they're told that, they can skip a few payments, that it's just a done deal, that it can happen because somebody mentioned it on TV. There was somebody this morning on CNBC that just, Diana Olnick, mentioned something
Right
on CNBC this morning, where she's saying that basically, yeah, go ahead, reach out to your lender. You can skip 3 payments and they'll just put it to the back of the loan. That is so wrong. That is so it is very wrong and incorrect information because every lender is different. And forbearance does not mean you get to skip 3 payments. Forbearance does not mean that it's forgiven at all. And every lender is going to have their own guidelines when it comes to that. And it's important for people to understand, dude, if you don't need that forbearance, if you're not in a tight spot, it's not a good idea to try to take advantage of that situation, because what can happen is you can get caught in a bad situation if you do this. And there could be people that get foreclosed on that may not otherwise get foreclosed on. So definitely recommend not just assuming that you can skip 3 payments, because there's a few things that can happen, because that does have to be repaid for sure. So some lenders I've heard that, maybe you can skip 3 payments, and then after those 90 days are up, there can be, those 3 payments might be due in full immediately, right? And then if you can't pay that, hey man, then that starts the firm process of going into default and that kind of stuff. Some companies are looking at doing a little bit softer of an approach, maybe after 90 days, spreading it out over a 6-month time period. So increasing your mortgage payment up to 50% of what it was before, just to pay that back. So it's definitely not something to just assume because somebody on the news says, yeah, you can skip payments. Please don't do it. Please don't just think that you can. If you have questions, reach out to your loan officer, but more importantly, reach out to the company that you're actually making the mortgage payments to. Reach out to like I was telling you, Andrew, reach out to your servicer, look at your mortgage statement, call that phone number and talk to them. Guaranteed they have a hotline set up. They have a team that's there to help you understand what's going on and what your options are, because please don't just assume that you can stop making your payments for 3 months, because it's going to get you in a bad spot for sure. I mean, I mean, we could talk more and more about that, but it is a very hot topic, and just, take it with a grain of salt when you hear something on TV.
And thank you for that, Bill, because go ahead, Marlene.
No, I just want to add that just Bill advice is excellent. You need to talk to whoever is servicing your loan. I was talking yesterday to a client that called me, and she's like, hey, you know what? I wanted to add those 3 payments just like on the back of my loan, like 3 payments just to the back. And I'm like, you know what? That's not how it works, right? And she's like, but when I asked, they wanted me to just not pay for those 3 months and come up with the money. So let's say this client had a $2,000 monthly payment, and if she's struggling to come up with $2,000 for 1 month, like, does she really is she going to be able to save $6,000 3 months from now? So they really do put them in a tight spot, just telling them like, just stop paying, because they do need to ask, okay, after those 3 months, what's going to happen? What's the plan that I'm in? Is it going to be a loan modification? Do I even qualify for a loan modification? Do I want one? Is it convenient? So yeah, definitely just reaching out and making sure that you ask all the right questions and all the questions to make a decision based on the correct information.
I think that's a really great point. I really think you made a lot of great points, both of you, Bill and Marlene, and thank you for bringing that up. Bill, that really dives deep into what Marlene was just saying about what we were talking about offline yesterday, about why is it working the way it is, how it's shaping up, and are these going to be like balloon payments that are due at the end of 3 months, 6 months, a year? Yeah. And if somebody was already struggling with the mortgage, I mean, we definitely need to have a real conversation with this, because if it ballooned on them all of a sudden, and to Marlene's point, if it was $2,000 a month and you had mortgage forbearance for $6,000 for 3 months, obviously, then when that comes due, if you couldn't make the $2,000 a month, how are you going to make the balloon of $6,000? And we know once you make 3 mortgage payments, you go into notice of default and foreclosure territory. Yep. So this is something we need to track, along with like the CARES Act and everything else as it plays out. And that's the reason for going live. So thank you both for those great points. Bill, it looks like you're getting ready to chomp on the bit and jump in again. Please give us all you've got, my friend.
Man, it's such an important topic, because because if a lot of people take advantage of this situation of what they think is just, hey man, I might as well skip 3 payments, which seems great, right? But it can potentially destroy the mortgage industry. It can destroy mortgage lenders. And when companies start to go under, then you start to really see some bad stuff that happens. So you want to be careful of that. And I'm just advising all my clients, hey man, if you can make your payments, please continue to do so. Because there's also talk of, again, it's mentioned in different news media outlets and on both sides is, hey, your credit's not going to be impacted. Neither side actually knows that. That's not how it's going to, because what's going to happen is, even if there's not a mortgage late on your credit, there will be a gap of like, hey, you were making your payments, and all of a sudden there's a gap of no payments being made. And then, okay, so we don't know how that's going to actually reflect in mortgage guidelines. While it might not show a mortgage late on your credit, there is going to be additional impacts on that. So for sure, I mean, there's so much stuff that could go into this being a bad situation and getting worse with that. But it is really cool that there is options for people that really need help. So not saying if somebody does need help, please reach out and just make sure that you understand completely what is being expected of you if you are skipping payments. So, and I think Drew's enthused called me out, man, right up here. My wife wanted to get me a thing.
Is that you? Is that you, Bill? Because I saw Seppia's back with us, and thank you for joining us again, Seppia. And Drew's enthused. Yeah, someone needs to change that batteries in their smoke detector. Bill, come on now. Come on. We gotta be safe. Keep that house protected. What's going on?
Oops.
You gotta represent. So we also have Kyle Walker that jumped on, and let's see. Kyle says, "Hi, Andrew. My wife and I are really on the fence about a house. Still negotiating repairs, but in the meantime, we're trying to solidly mortgage. We're trying to solidly mortgage." And then it looks like we have a question coming up. Is it better to buy at the top of the market, but with lower interest rates, like 3.5%, or try to wait a few months until the market crashes, but potentially have a higher rate? So Marlene, before I let Bill jump in on this, I'd like to get your perspective as a Dallas agent and a top performing one at that. So what do you make of Kyle's question?
So this is what I've been telling my clients, right? If you are in a good situation right now to buy, and this is going to be based on each client, right? But if you, at least in my market, I am being able to negotiate a little bit more with the sellers because of the initial fear, right? We don't know what's going to happen, right? It's all a lot of speculation, right? Is the market going to go up, down? If it's going to stay the same? We don't know. The only thing that you might know right now is that you have a good rate, that you are able to negotiate a little bit more with some sellers. And if you are at a good point in your life financially where you are not being laid off, you have your job, and you have maybe a couple of months of payment for your mortgage saved up, then yeah, it's a great time to buy. I wouldn't just wait on speculation, to be honest.
No, those are awesome points. And Kyle, to touch on those too is, I mean, we don't really, it's speculation. We don't know, is the market going to crash? God, I hope not. I don't think so based on everything that we're seeing. But we don't know for sure, right? But the thing to think about, like you were saying, is if if you qualify right now and you are able to close on your house and the rates are really, really good historically, like phenomenal historically, prices are still very good as well, maybe a little bit higher than you would want. Not only, if you wait for something to like quote unquote crash, right? Once that happens, if it did, the lending guidelines are not going to be as friendly. So, hey, you might be able to maybe get a house for 10, 15, 20,000 less, maybe, but can you even close on the loan because maybe guidelines change? If a crash does happen, it's not going to be just the prices that drop. It's going to be loan programs that drop. There's going to be guidelines that are added. There's going to be additional things that happen to where it's so important to understand that there's more to it than just that. If you qualify now, I would absolutely say it's a good time to buy if it makes sense for your family. If your job is secure, you're putting yourself in a good situation, because if you're renting, I wouldn't want to be renting right now with the chance of being able to have my landlord say, hey man, I'm selling my house because I need the money. And then you can't buy, and then you can't find a rental, so that would be something to think about for sure. So I hope that makes sense, but yeah, if you can qualify now, absolutely, I'd recommend buying.
That's a great point, Bill. And it always comes back to essentially two different things that I like to bring up, especially Kyle, when people talk about the the real estate market crashing. Number one, this impression in most people's eyes is a 2008 type collapse. And that's just not the case. And I don't think that when the real estate market does go down, because markets go up and down and all around, let's face it, these are facts, okay? Yeah. But that said, a 2008 event was a catastrophic event, essentially of like a perfect storm proportion, where it hit all markets, all sectors across the United States, across the economy, and across the world at one time. Back then, people could get stated income, stated asset loans, no income, no asset verification loans. And that's just not the case since we've risen out of that collapse and into today's market. Nowadays, buyers have to actually qualify for the loan and have their income, assets, credit, and employment verified, and ensure that they're actually meeting a financial qualification standard to be able to purchase a home. So when you look at the rate of defaults, and that's something I talked about in my 2020 predictions video, it's important to take stock of the facts. And you hear a lot of people that would say, hey, don't do this, or they're fear mongering and try to prey on your fear. But somehow those same people that tell you the market's going to collapse, don't they also offer you like free training on how to take advantage of it if you just pay them $1,000? I mean, let's be real and make common sense out of this, because we're always stronger and better together than we are not. And the best thing that we could ever do is have each other's back and come together in these times and stay together long after the fact and look out for each other's best interest. So, I mean, those are two thoughts I always have on that. I would like to turn to another question here, which, let's see, Meseret Binti.
Yeah.
And if I'm mispronouncing your name, bear with me. My country boy self, I tell you what, sometimes it just don't come out right. I don't mean any offense if I butcher a name, so my apology.
Country boy.
The question, yeah, Anna Marine, right? Yeah. So Meseret says, good morning. I am already pre-approved for a condo at 4.75% interest. I'm on the process of getting final loan approval. I am conventional with 20% down, but laid off from my job. What are my chances? Now, that is something we've definitely been talking about, Bill. Please go ahead and answer.
Yeah, so that's a great question. We've been having that come up a lot here in Vegas. I'm not sure where you're at, but it depends on a few things. It depends on your job situation. What did you do for work, right? Were you in sales? Were you commission? Were you a bartender? Or were you on a salary type position? That's first thing to think about, because when we do return back to work, if it is one of those types of positions, we don't know exactly what our commissions or what the tips will look like. The other thing to look at too is, when are you currently getting paid from your employer? If you are currently getting paid from your employer, do they have a guarantee set up in place, and how long is that set for? Because potentially, if they do validate that and they do verify it, I know lenders out there, us included, can potentially close on your job if you're still getting paid. If it's a true layoff, or if you do not know when you're going back to work, you're putting 20% down. I mean, unless you have your family set up and you have a lot of money just chilling in the bank that you can use, you might want to think about just seeing if you can get maybe an extension. I know, Andrew, you and I talked about this on a deal that we were doing together, is seeing if you can get an extension of escrow to maybe 30 days, right? Again, that's just my opinion, but getting extensions to play it out and kind of see what's going on in the market, what's going on in your local area, wherever you're at with your employer, and kind of get a feel for it, right? Because the last thing you want to do is close on a house, spend get 20% out of your account. Maybe you don't have a lot left, and then shoot, you don't go back to work for another 60 days, right? That's a very bad spot to be in. So every situation is different. We're closing on someone right now that actually is furloughed here in Vegas, but they're a salaried position. They're still getting paid. And it's a little bit different of a situation with them. So again, just make sure you're setting yourself up for success. And if you don't go back to work for maybe 30, 60 more days, you're not going to be in a tight spot, because 20% down is a good chunk, to put down on the house. So I hope that makes sense.
Let us know they're a taxi driver, by the way, here in Las Vegas.
So in that position, I would think about it. I would think about it. If you've got if you've got a couple $100,000 left over in your account, when you're done, or you got 6 to 12 months what it takes you to live in your account, great. Maybe look at doing something like that. But it just depends on your individual situation.
Right. And if you have questions about that, I put up Bill's website. It's also linked in the show more description below if you want to reach out to him directly to have a conversation offline, more to your point, more to your needs. We have your back, and we're definitely here for you. So please feel free to reach out to him if that's what you would like to do. So let's turn to another question here. Sevia, a little bit of humor here with Sevia. Sevia said, I thought that was my smoke detector, and I sent my husband out for batteries, trying to get her comment up here. So that's pretty funny. So thanks, Sevia. Let your husband know whenever he gets back from the store, hey, go ahead and change those batteries. I mean, if that's been 6 months, 12 months, it's time to change them anyways. But no, that was our great friend, Bill Merren, over there that has the batteries that need to be changed.
Literally right here.
Literally right there. So make sure you get that fixed for next week's live stream, my friend. So let me see. This is a great question. I'd like to get your perspective on. Marlene, come up here with, and you would probably be able to pronounce this better than me, so I'm going to let you just go ahead and read the question.
Oh. Hi, guys. I just closed on a property yesterday, and the Inland Empire, but there's a tenant that there's... Bill, why are you doing this to me without my glasses?
Okay, I'll read it for you then if you want. So El Chaca Chinola says, hi, guys. I just closed on a property yesterday on the Inland Empire, but there's a tenant there that they are not going to move, and I assume on the next 2 to 3 months. So what's going to happen with my mortgage during this time?
You just closed on a are you asking me? So
you or Marlene?
Go ahead, Bill.
Okay, so what's going to happen with the mortgage in 2 to 3? So, you're going to have to continue to pay that mortgage, is what my thought is. Like I said earlier, though, if you are in a tough spot and you're not able to make that payment, even if the tenant is not paying rent, then I would reach out to your loan servicer. So look on your mortgage statement, look for that phone number that's on there, give them a call and see what they can do to help. But it's not going to automatically be deferred just because your tenant's not going to pay rent. As an investor as well, I don't know what the guidelines are going to be for people that have investment properties when the tenants are not paying. I assume that's what you mean if the tenant's not paying rent. Excuse me.
Okay, so a great point, and thank you for the take.
saying that he's purchasing a property that already has a tenant in it?
Correct.
What's
A
gonna
tenant occupied property that it sounds like the tenant's not going to move out for 2 to 3 months. And in my mind's eye, what I think of is the buyer agent should have been negotiating some form of a lease back and some form of an official move out date. Since if the primary owner type situation as opposed to an investor, they realistically should be moving in within 60 days of close to be compliant with the lending guidelines for a primary owner occupant home loan. So the question then is, they're asking what would happen to the mortgage. In short, I mean, the answer really comes down to you're still going to pay your mortgage. You closed. So once you hit that 45, 60-day mark or whatever was you were informed through the title company and your loan officer about when your first mortgage payment is due, your first mortgage payment is due with or without a tenant inside the property because you are now the new legal owner. That's how I read that. But I always like additional perspective just in case I'm wrong. I'm not infallible, obviously. So I love your experiences and your wisdom here.
Okay, so if he already closed on the property, there must be a lease in place, right? So he knows maybe it's going to end the lease in 2 or 3 months. So since you're the new owner, you are the new landlord of that tenant. And at your closing or when, like before your closing, you should have gotten like the copy of that lease to be able to make sure, right? Because if you're buying it as an investment property, you do have to make sure that tenant moves out to put a new one. So because you are responsible for the payments, not right away, and you can kind of jump in here because whenever you close on a property, let's say you closed in May, then your next payment is going to be until like June or something, right?
Yep. And you actually, I think I might have read that question incorrect. I think you were correct on that.
I didn't understand it first, so I was just like, Bill.
It's always good to have a loan officer on, official loan officer, so we can pick on him, right, Marlene? Us real estate agents. Hang on, that's a loan question. Bill, hey, it's all you. You take it, right? And that's the beauty of being able to live stream and answer questions real time. So thank you for being here, Bill and Marlene. I tell you, it's great. So let's turn over to another question here, Nathaniel Lamb. Let's get Nathaniel's question up here. There we go. Nathaniel says, hello. I already am in the process of selling and buying, and we have not yet signed any contracts. With a lot of uncertainty in the world, should I press pause for a few months or proceed forward? Thanks. Your thoughts, Marlene. Real estate question here. So your thoughts.
So I think whenever you're buying and selling, it's just like, it couldn't be more perfect for me to say, right? Like, because in more like if you already have the property that you're purchasing, because real estate, it might be going in waves, right? But like if you are selling high, let's say, you might be buying high. So like if you wait to like buy low, you're going to be selling low as well. So like for me, it doesn't really, like it's going to be the same, right? Like if you are doing it right now because you're in the same side of the market, if that makes sense. So like if in 2 or 3 months, if everything goes down, then your house and the selling price is going to go down with the buying price, if that makes sense. So like I said before, like if you're in a good place to like handle the cost of moving and getting into a new house, then I don't see why not.
That makes a lot of sense. So in short, you're actually just saying that the market is directly proportionate to the buy and sell side, depending on what side you are on the high or the low. And ultimately, the best time to sell or buy a home is for the reasons that are important to somebody in their life at the time that it's right in their life. Would that be a correct summarization?
Yes. You just have better English than me. That's all.
Hey, you got clear Spanish, and I can only hold down "Cómo estás?" So let's just be honest, right? So I got "Hola" and "Cómo estás" down. Other than that, hey,
what I have.
It's all So, Bill, I know that you said that you're going to have to jump onto a sales call. So I want to get one more lender question in so we can address Willie Man 23 right before you have to hop off. And then Marlene and I can take on the rest of the questions from the real estate perspective here. So Willie wants to know, are our interest rates going up? I'm currently locked in at a 3.375% and looking to close mid-April. Suggestions and thoughts, Bill?
Yes, sir. So you're locked in at 3.375 close for sure. Are rates going up? Probably. Are they going down? Maybe. Are they going down below 3.375? I doubt it. If they do, maybe a little bit, but the chances of you catching a higher rate when you have to lock are much greater now with what's going on. So if you're locked in at a rate that you qualify for and you're locked in at a rate that is you're comfortable with the payment, I would suggest closing at that rate, because literally, guys, yesterday I was 2 days ago, I was on the call with a lady, very qualified, 802 FICO score, 20% down. I mean, tons of equity in the property she was buying. And I was going to lock her in at 3.25. Literally, from the time I was talking to her until I clicked on the button to lock in her rate, that rate jumped 3/4 of a point. Not the cost of the rate, but the actual interest rate. And she was so nervous and scared that it was going to continue going up. She decided to lock in right there as well. So if you're locked at 3.375, yes, sir, please close on that loan. If rates get a lot lower in the future, into the twos, after you make 6 payments, you can look at potentially doing a refinance at that time, but it may not be worth it because you have such a good rate at 3.3. I mean, that's a phenomenal rate.
It really is. I mean, the historic rate, we were talking about this on Monday, and, I kind of nerd out about my real estate, try to be the best real estate practitioner I can possibly be. And not only did I go through the 100-year historic average of home appreciation in the United States, I also took a look to know exactly what had happened in the 2008 downfall, the last time we saw such a huge depression in the market, which was actually the Great Depression in 1930s. That said, I also took a look at, just for curiosity's sake, mortgage rates. And I found that the average mortgage rate on a 50-year historic cycle was approximately like 8.5 to 8.75, with the high being around 1980, 1981, close to 19% at the time. So I think back in my mind's eye, and I think that we all have become a little bit spoiled to the present level of interest rates, and being used to seeing interest rates under 4, and then hearing that rates were down as low as 3. So I think when we hear these things, we're like, wow, why is the rate 5% or why is the rate 4%? Well, one thing, and I noticed a commenter earlier in the stream that I wanted to nail a little bit and address the question or address the comment, was to Meserat's point of saying 4.75. And a gentleman had commented, oh, don't do it, that's a high rate. Well, from what I know, and working with you in practice in 168 career closings and counting, and Marlene probably knows well over her 100 or so closings that she's had in her career so far, is it really depends on an individual circumstance, their credit score, their financial ability to repay, and what loan program they're using. A 4.75 out of my mind's eye right out of the gate compared to the prevailing rate for most well-qualified home buyers right now would have suggested to me it was the down payment assistance program, but they did say 20% down. So then it brings us in the question of, okay, what credit score situation, what kind of credit program did they have? Would that be a correct assessment, Bill?
Yeah. So just to assume blatantly that somebody has a rate that's too high, you got to look at the situation. Like you said, Andrew, credit score, man, like we've talked about, is, especially on conventional loans, is going to be one of the biggest determining factors of interest rate. Because if you got below a 680, you're not going to get those rates that you see advertised. You're just not. So it's important to understand that 4.75, again, if you can qualify, if it's within the guidelines, 4.75 for your situation may not be bad. If you do have an A+ profile, meaning 740 plus credit score, you're putting 20% down, you're doing a normal conventional 30-year fixed loan, you might want to get a second opinion. And I'd love to chat with you about that if that's the case. But if not, if that fits within your situation, maybe a little bit lower FICO, then it is what it is,
Good stuff, Bill, and thank you for that. So LaRon Hall, this is a name that we know, and Mr. LaRon started watching the YouTube channel, oh geez, my friend, what was it, 2.5, 3 years ago? And he was so awesome. It was like 2018, and he's like, Andrew, I want to schedule a time to meet with you in 2020. Is it too early to schedule? I said, of course not. I have a Google Calendar, and let's keep in touch and make it work. I love knowing what my schedule looks like, especially 2 years from now. It was awesome. So LaRon is now on contract on his and his wife's beautiful new home construction, not too far from my office, matter of fact. And LaRon says, hey, everyone, I hope you are all having a blessed year. I'm excited to hear the dynamic duo. I have the best team with Bill and Andrew. You guys have been great with guiding me through my first home. Okay, maybe I should have read that first. Do I owe you something, LaRon? Just kidding, LaRon. I always appreciate your positive energy, my friend. It would be great to have you on camera sometime, Laurent, if you wanted to jump on the live stream or something. Such a positive, energetic young man, and just absolutely amazing. So Laurent said, if anyone's moving to Vegas, these guys are the best. And Bill, I'm ready for the murder gunfight. Lots of laughs. I have no idea what that is, but I assume that must be something.
Probably saw my Nerf video with the boys. That's probably
there it was. Nerf gunfight. Yeah, that was a really good video there. That was with their kids. So y'all, Bill does some stuff with the kids, obviously being on lockdown right now, working out of his home office presently. And he's been with his 3 boys. He's got 4, but the 3 boys are younger. And he's thinking, what can I do as a Papa Bear to keep my kids engaged, homeschool them, and also relieve some of a young boy's energy? And started making some videos. You'd have to check it out. It's pretty cool stuff. What's the name of your channel in case somebody wants to take a peek?
It is Vegas Warrior Kids TV.
Vegas Warrior Kids TV. So if you want to check it out, go ahead and check that out. Let's see. Andrew Castillo comes up next.
Don't mean to interrupt your brother, man, but I got to jump off this. I got to jump on that guideline sales call.
Okay, go ahead. Hey, appreciate that. So Bill will be back with us on Monday with what he's learning in this sales call and his Friday sales call as well. That's really helpful information for us to know. And that's part of the purpose of doing this 3 times a week, is to keep everything up to speed. So Andrew Castillo, thank you for joining in. Andrew says, just locked in 2 days ago at 3.25, and just heard from my lender yesterday, the FHA loans just got suspended, but since I locked, I got lucky, I guess. It's a great point. Marlene, what do you think?
No, that's true. I mean, he just got lucky because like Bill was saying a minute ago before he left, the FHA guidelines have changed and everything's becoming a little bit more strict. So I have a client in the same situation right now that he was thinking about, with all this, I don't know what's going to happen. He was thinking about terminating the contract. And that's a conversation that the lender had with him. He was like, you know what, like, you're really lucky that we're about to close this house, because if we lose this one, you're not going to be able to qualify with the credit score that you have, because the FHA guidelines are tougher right now. And so he's just going ahead with it. But yeah, lucky you.
Lucky you. Congratulations, Andrew. I think a lot of us would love to have a 3.25 rate. So that's a smoking low rate. So congratulations on that. And super excited that you'll be closing at the end of the month. I'm assuming that could be today or tomorrow, because we kick off April pretty quick. So it might be the end of April. Either way, I want to send you and yours positive mojo as you feel those walls full of love, laughter, and joy moving forward into the future. And I hope it's everything you've ever wanted it to be with you and yours. Thank you so much for joining in. So Terry Beveridge is next, Marlene. Let's see what Terry's asking here. Terry says, hey, lady and gents, I have a lender appraisal happening in 30 minutes. Should I show them my appraisal I had done a month ago? Marlene?
I don't think it's necessary. I think if something... whenever the appraiser is done and you get the result, if there's something that you feel that you need to dispute, maybe you can bring it up. But honestly, just let them do their job. They have the same access to the inventory that has sold than the other one. Maybe more updated, because they're doing it a month later, which more houses have sold after that. So I was just lay back and see the results.
Good stuff. And thank you for your point of view on that. She did let us know that she was a seller. He or she did let us know. So Willie Mann came back to say thanks. He says, thanks, guys. I appreciate the answer. This will be my first home, and we feel blessed that we are in escrow with our near dream home. Congratulations, Willie, sending you and yours positive mojo gojo for many happy years as well. It's always exciting. Marlene had the opportunity, as she mentioned earlier today, to help somebody that I helped here in Vegas. And that's actually how Marlene and I met, was through me trying to help find them a top agent in the Dallas marketplace. So it's pretty cool. I'm happy to show this. She does a lot of wonderful stuff on her social media. Awesome and amazing agent there in Dallas. You see that she does speak Spanish, and I greatly admire her, frankly, for going there and speaking Spanish, because we have such a large Hispanic population in the country. And I, for one, I don't know what happened. I mean, when I was in school, they're like, hey, you got to take this Spanish course, this Spanish course. And when I was taking university at the collegiate level, and they're like, hey, you got to do this for like a year. And I still walked away. Maybe I'm just, maybe I'm not a Rosetta Stone or something. But, Marlene over here is bilingual and speaks extremely well. And I did see, obviously, you have your a lot of 5-star ratings, but there's the gentleman right there. Super happy, super amazing. And Marlene's cute puppy, which I can see the puppy's hair a little bit in the video now. But if you want to reach out to Marlene in Dallas, she is a top agent. She's an amazing individual and a top-notch professional. So what I would suggest is using the links in the show more description below, whether you're on Facebook or YouTube. I put it in both descriptions so that you can contact Marlene on her Facebook or Instagram profile. She has one of those things too. So you guys can get in touch. And if you're in Dallas, she's the right lady to help you. She did an amazing job with Chris, and super happy about that. So Marlene, I know I may have said so much, so you can feel free to take over.
No, thank you. Thank you so much, Andrew. We were talking yesterday with with our mutual client now, Chris, that we appreciate everything that you're doing, and you have been just such a great resource, and I appreciate all the work and time that you put in. I was looking at your YouTube channel, so many videos, I don't know how many hours that took. So that's great. Honestly, you're doing a really great job keeping the public informed in topics that they might not know that much. So that's awesome. And I'm happy we got to work with Chris together.
Well, fantastic. And I certainly appreciate the kudos there. So if you're asking about hours of making those videos, there's over 630 on my YouTube channel, from top level inquiries down to hyper niche things about inspections, what's expected at an appraisal, what happens, walkthroughs, final walkthroughs, live, new construction walkthroughs, all kinds of fun stuff. So when you talk about amount of hours, my guess is I'm probably well past 10,000 hours in my video days, in between the way that you shoot them, edit them, and all that fun stuff. So it comes from a place of passion. As a person, what really drives me is love, joy, and hope. And it's one of my affirmations every day is to bring love, joy, and hope to every interaction I have, whether it's direct or indirect. Thinking of all those videos and people, viewing me on their cell phones, their television, their smart device, wherever they might be in life, or maybe even just listening to the audio. And I really think about the person on the other side and the kind of community that I'm working to build on my YouTube channel, one that is all about helping each other and one that's all about kindness. So, it's not easy to make that many videos, and sometimes it's hard to sustain, to be honest. At the same time, it really comes from that passion and being very clear on the reason that I'm here and trying to do my best every day. And I think that is evident from your social media profiles on Instagram and Facebook, that you believe the same way, and you're just a good person. And I believe that good people attract good people, and that, in the words of Sean Connell, your vibe attracts your tribe. So it's fun to see how that comes together over time by just taking a step and a leap of faith to reach out to somebody and say, hey, I don't know this lady, but I'm going to give her a call and see if she can help, because I checked out her reviews. And my God, I think that she would be amazing to help out Chris. So anyways, let's get back on topic now with some Q&A and see what else we have. Okay, let me scroll through. I've seen a whole bunch more pop in, so I need to find where we left off at. Okay, so Ben Provost. Ben, thank you for joining us again. I recognize your name from the YouTube comments as well. I got one of those weird eidetic type memories where I literally can remember boom, a lot of stuff. So I recognize your name, and thank you for reaching out and being here with us today. So Ben says, I was pre-approved for a 30-year RD loan, a USDA, so obviously rural development, 3.125% in mid-Jan. New build. But Freddie Mac PMMS was at 3.65% at that time. Why was mine lower? Because I've got good credit history and a score of 815. Highly likely, Ben, because I know exactly what you're talking about with the PMMS. It's something that I put out in those prediction videos that I make all the time, directly linked to Freddie Mac, speaking of. But that said, my guess is it is a combination of what you were doing as far as perhaps the amount of down payment in concert with such a absolutely amazing credit score, and also whatever kind of loan you were getting specifically underneath the USDA, because those there are special things. I mean, they're not too long ago, matter of fact, like 3 weeks ago, Bill and I had closed a client with a very Nevada specific program called the Hope Brings You Home program, which was available underneath FHA, VA, and conventional loans here in Vegas. That said, we had a client that actually closed at a 2.875%, the lowest interest rate I have ever seen out of any family that I've ever worked with. And I thought, wow. And the only way it was possible was through that specific program. Once that program disappeared, the funds were used, it was gone. So to your point, a 3.125, that's better than my personal rate. How about you, Marlene?
Yeah, me too.
Good stuff. So Ben, I see that you tagged it back with another question. So let me go ahead and pop that up. Also, can I expect my rate to be lower than Freddie Mac PMMS at the time I lock as well? That's going to be a conversation you're going to want to have with the loan officer that you're working with, frankly. Please give them a call. Please ask them their insights, and just essentially share with them what you're sharing with us right now and have that conversation. Drew's Enthused said, thanks, Bill. Before Bill got off, thank you for that, Drew. Appreciate your support of Bill. Andrew Castillo says, thank you, guys. Well, don't forget, we got the nice lady Marlene with us too, but I know what you mean. We're good. Terry says, okay, thanks. Appreciate your reply. Of course, that's what we're doing this for. Rafael Flores, I recognize your name as well. Oh, hold on. These comments are coming in faster than I can keep track of them. Thank you for the engagement, everybody. It's great to have you here with us today. So, Rafael, let me see if I can get your comment up. I'm trying. There we go. So Rafael said, clear to close today in Fresno, California. Thank you for carrying me through the escrow period, Andrew. Hey, Rafael, thank you so much. Appreciate the kudos. There's a lot of great trusted real estate advisors around these United States. I just go to bat on the YouTube platform and do what I can. Marlene goes to bat on Instagram and Facebook, but there's so many different agents. I have an agent joining us next Wednesday from North Carolina that has her own radio show in North Carolina as well. So we all take a different approach. It's about working together as an industry and helping you. And being that you got your clear to close, it sounds like you're probably going to be getting those keys ideally come by Friday. So congratulations. Super stoked for you, Rafael. Thanks for letting us know. Hi, puppy. What are your thoughts on that? Did you want to comment too? You can come in. What's your puppy's name?
Mila.
Mila? Mila, hey, you're absolutely welcome to share your thoughts. It's great to hear from you. So let's see. Looks like we got several people from Fresno. That's interesting. Drew's Enthused says, Fresno, congrats. Hey, love it. Love the energy there. And then it looks like Willie Mann says, hey, Rafael, I'm in Fresno too. Andrew's video really got me prepared for the home buying process. That's awesome. Thank you so much for the terrific support, y'all. Really means a lot to me, and it helps me keep my passion going to keep coming on and doing this. To Marlene's point earlier, a lot of hours, a lot of work, and sometimes I wonder if I'm climbing the right mountain, frankly. And seeing those kind of comments and having the opportunity to hear from you live like this, it really means a lot. So from the bottom of my heart, thank you. Darren Carter. Well, we know all about you, Mr. Carter. You've been on a lot over the last couple of years. So Darren, I just want to say this: homeownership is more than a notion. Number two, if you're buying a house with your spouse, a word of caution. Make sure that if anything comes up financially, that either spouse can pay the mortgage. And then a third one here from you. Hold up. Darren Carter, if you're relying on both incomes to pay the mortgage, the house might be too much. I'm glad I did this with our home purchase in November of 2018. Great points, Darren. Marlene, thoughts?
No, I mean, that's a great way to being cautious and a great way to save money as well, because if you're only using one spouse's income to pay the house, then you have the whole other income to invest in real estate, get some rental properties, or do whatever you want. So I think it's a great advice that you're giving people as well.
Fantastic. Thanks for that point, Darren. And Darren, thank you so much for coming on today, and keep following the channel, my friend. It's great. We got a lot of new things coming down range this year. So Rocky Brody, If I can get you up, Rocky, here. It looks like I'm overlapping for some reason. So Rocky, there we go. Rocky says, I also had a client locked in at 2875 through the Hope program. Fantastic. That's amazing. Queen Cat, thank you for joining us from Dallas, Texas. Marlene, Queen Cat is interested in buying a new home construction in Spring, Texas, north of Houston by Toll Brothers. Any advice for us as a new home buyer, especially during this time? As Marlene answers that question, the help out, I'm going to pop open her website so that you have her contact information to reach out.
Well, honestly, my best advice is to ask as many questions as you have. And with the new builder, obviously, I always recommend, even if it's a new build, to have an agent that's helping you out and that's clearing out your questions and looking over the contract with you and what incentives you can get from that builder. And right now, honestly, builders are giving great incentives, even from closing costs to interest rates. So they're really pushing people, precisely because we are in this time. They're pushing them with great incentives to buy those inventories that they're building. So definitely a good time to buy new builds as well.
And my guess is, Marlene, if she's going to be in Houston, right? Is that area that you service? Since you're in Dallas, I mean, do you take a trip to Houston on occasion?
Houston is a little bit far from me. I like
a little bit far.
Surrounding of Dallas, where I know the most.
Hey, that makes a lot of sense, but I'm sure that you know an agent over there that you might be able to put her in touch with, because you're a well-connected agent in Dallas and you make things happen. So Queen Cat, again, it's the reason I popped up Marlene's information. If you want to reach out to her after the stream, please feel free to do so. Perhaps Marlene can help find the right agent to help you buy your new construction home. Okay, so Marlene, I did see that Bill sent me a private message a moment ago to anybody wondering about the FHA home loans. He said they did not, DIDNOT, get suspended. Bill, as you know, had to hop off real quick to get onto a call at his corporate level. They've been having these calls on a near daily basis, if not a nearly daily basis, and sometimes several times a day. So I know there's been a lot of concern about FHA loans or VA loans or USDA loans getting suspended. And specific, Bill just sent me the private message, said FHA loans did not get suspended. So that's great information for anyone out there looking for looking to use an FHA home loan. So Bill, thank you. And I'll track back with you to give you a call later on to thank you for that as well. Ben, let's pop them back up. A little bit of a glitch here. Okay, there we go. Ben says, thanks, Andrew. And yes, it's me. I've been here before, and you may be right. I don't know the specifics of my loan program. It may be something specific to rural Louisiana. It could be. Best way to know for sure is just to simply pick up the phone and have a great conversation with your loan officer and get down to brass tacks of how that's going to work out for you. Always a great place to do. Very simple. Pick up the phone, make a call, right? So we've been streaming live for about 48 minutes on YouTube and Facebook. We will be live again on Friday. Kate Barnes, a realtor in San Francisco, joins us live, and I have a special guest, being an appraiser, joining in as we figure out what's going on with drive-by appraisals. So make sure to tune back in at 9 a.m. Pacific Standard Time. Again, live 3 days a week, Monday, Wednesday, and Friday. Before we hop off, I got to give one more Positive Mojo plug to Miss Marlene, because she's just been such an awesome guest today. And by the way, thank you for coming on, and you're welcome back anytime that you like. So Marlene's Facebook page. So Marlene, I always like to try to end things with Positive Mojo Gojo and keep it going. Would you give us some words of inspiration and your thoughts as we get ready to adjourn today and look forward to Friday?
No, I just thank you so much for having me. And in all this situation that's going on, I just want to remind everybody that even if times are difficult, to try to keep positive mindset and try to appreciate everything that we do have, and just be grateful for every day that we get to be here and spend time with our family or our friends. So
Absolutely. And great points. And to everyone that has stayed on this whole time, thank you so much for that. And please definitely get the word out about what we're doing. We're here to help. And to Marlene's point, let's keep that positive mojo going. Let's keep that spirit of love, joy, and hope out there. And let's come together, not only in this time of need to help out those that are in need, but also to keep it going moving forward. Together, we can actually usher in a whole new era in this world of enlightenment and innovation and of peace and prosperity. Let's do our part today to be the reason someone smiles. Marlene, thank you so much for joining us, and look forward to catching up with you again in the future.
Thank you.
Enjoy a beautiful day.
You too.